Everybody, welcome to this week's podcast. It's November the 7th, 2025, and guess who's back? Mo, hope you had a good break last week.
Yes, it was a nice break. I'm glad to be back.
It's week 33. Mo, what's this week's topic title?
Is China buying U.S. beans? The market's been concerned about that after that trade truce, and the USDA November 14th crop report could be game-changing report. So let's get into it. Let's have a look at what the markets did this past week. It was an off week. It started off well because of that U.S.-China trade truce, but we just couldn't get past the ceilings, particularly on corn and beans. At beans 11.35, corn around that 4.35. It's amazing how they're both 35, but even by the end of the week, we had a little bit of a risk-off week. I don't know. Somebody woke up on Thursday morning just on the wrong side of the bed, and you can see the stock markets were down. The grains did okay. I mean, we came back a little bit today. They continued to sell the hogs. It drifted lower, as well as cattle. But I think cattle is becoming quite oversold, and we could find a bottom here soon. So we'll get into that. But other than that, it was. I think the markets have priced in most of the good earnings for stocks. I mean, I know NVIDIA reports on the 19th, probably one of the last AI stocks or Mag 7 stocks to report. But I think the grain markets are taking a wait-and-see attitude ahead of that USDA report next week. All right, so why don't we start off with China lowering U.S. ag tariffs?
Last week was about that U.S.-China trade truce. China did lower the tariffs on ag, but they remain a 30% tariff on U.S. soybeans, and that makes the U.S. uncompetitive after a soybean futures rally versus the exports from Brazil. China is, however, buying U.S. wheat and sorghum. And after a week of U.S.-China trade truce, the market is skeptical that we have not signed an agreement as of yet, not heard much from China. There are no details yet, and there are rumors that China is buying soybean futures rather than physical.
Yeah, you can see on this chart that the soybean tariff still remains around that 13%. And that's making U.S. soybeans expensive compared to Brazil because of the rally in beans to this 11.30 mark. So I think the market was disappointed in that. I thought maybe they would like to see maybe that go away. But don't forget, COFCO, the big trading company, government agency in China, they can waive the tariff. So whether China lowers this to zero or not, if they're buying beans, they're going to buy beans. And so we'll have to wait and see. I think everybody needs to chill out, to be honest with you. It's only been a week. Give it some time. I know you guys have waited a year for this. We've been telling you that this was going to happen. It's a win. We've got 12 million metric tons maybe by the end of the year. That's better than zero. Next year, 25. So again, it's a win. That was one leg to our stool. We're now looking for the second leg to our stool. There's actually 4 legs to the stool, but we'll talk about the 3 in this podcast. So the second leg is next week's USDA crop report, and that one could be a game changer. Why? Because if the USDA lowers ending stocks and lowers yields without touching the export forecast, and I was going to put up a chart on the soybean export forecast for next week. It's 1.685 billion. The USDA could now kick the can down the road because it's so early in the marketing year. But see this gap here? I don't think that gap gets filled. I think it's around that 1063. I don't think we go back down to that, but there's a gap all the way back to July of 2024, and it's just around that 1034.5. And this week the high was 1134.5, and the high this week was 1134.25. So I think if we're going to break that gap or break above it, it's going to be because of that November 14th crop report next week.
The U.S. Supreme Court could rule against Trump's tariffs, but the Trump administration does have a plan B. There seems to be an updated 20% chance of President Trump winning the Supreme Court ruling on his global tariffs. Initially, it started off with pretty good odds of him winning at 60%, but that has dropped after the first day of proceedings.
So, this just creates more dark clouds over the narrative, the sentiment over this U.S. recent Chinese trade deal. I'm not too worried about this because, as many have said, I think that number's down to 20%, but he can find a plan B. He's going to find a way to keep these tariffs on. He does not want to refund these countries all that money. So I think this is just noise.
Sticking with the US government, the shutdown that we are in currently is the longest in history. As far as the US government is concerned, it's into 38 days, and some are saying it could last through the US Thanksgiving weekend, and that starts November the 27th.
He's not going to make too many of his base too happy. If you're going to take away Thanksgiving to a lot of Americans, this is a problem. So I don't know. We'll see. The Democrats won a lot of elections here recently. I don't know. Trump's risking a lot of stuff here because midterms next November, 2026, he may end up losing some votes instead of gaining some votes.
Despite that government shutdown, we may luckily get the November USDA WASDE crop report. Wide range of estimates, like you guys can see on the screen, for corn ranging from 178 to 186, and on the soybean side from 50 to 53, slightly higher than that as well. If the USDA provides a bullish surprise and lowers those corn and soybean, US corn and soybean yield numbers, we should be in for a retest or a test of the ceilings on corn at 4.35 and soybeans at 11.35.
Yeah, so those S&P global numbers I think are too high. Look, after all that dry weather, the disease pressure, I talked to Dan Quinn this past week. So this is not coming from me. This is Dan Quinn. He's talked to a lot of folks across the country, 10 states, experts. South Dakota and North Dakota are probably higher than last year, but every other state is lower. He's basically suggesting the bean yield's 10 to 20 bushels lower than last year. Corn minimum 10 to 40. He thinks the yield could drop to 178, but he doesn't know if the USDA is going to give you that this coming Friday, and he thinks the bean yield could eventually fall as low as 50. Some of these other ones, DTN, again, that's plot data. So that's what they were seeing in some of their plot data. Weifels, same thing, lower yields compared to last year. Pro Farma did a survey, 178.5. It was mostly corn. I don't think they did the bean survey there. And of course, USDA is at 186.7 and 53.5. Now, please note that at the end of September, when we started this U.S. government shutdown, the head of the USDA said that he would keep people back without pay to get some of this data done. My concern is that we missed the October crop report. Why is that so important? Because we had all that harvested plot data. Did we harvest those plots? Did we gather the data? If we didn't gather the data, how am I going to know that this disease and dry finish impacted the weight on both the corn and beans? So a concern going into next week's report. And then again, these are some of those yield estimates that we were hearing from over the last couple of weeks.
And looking at the history since 2000 and specifically as far as the corn yields are concerned, like you said, we missed the October numbers, but just to compare what USDA has done from September to November, over 50% of the time, USDA has raised corn yields from September to November, and the increases, as you guys can see, have been pretty sizable. But over the last few years, they've actually been falling. And this dry finish that we have, the chances of yield numbers falling are much higher than them rising. Same case with the soybean numbers. Again, from September to November, about 50% of the time, they've increased it over the last many years, but recent numbers have been dropping, as you guys can see, especially those last 3 years.
I don't think next week's report's going to be perfect, folks, but at least we got something instead of zero. Again, I would bet that the yield's going to come down. The question is by how much. Don't forget to try our program. This past week, we were talking about all the technical outlooks on all the grains ahead of this USDA crop report. It's important that you guys know the ceilings and supports and what's possible. So check that out.
And let's spend a minute on that December corn chart. And like I was saying, the ceiling comes in at 4.35, but we've been in that recovery since late summer, Mo.
If you're a livestock producer, you better manage your risk. Feed is important to you. Again, touching that 200. We've talked about this in past podcasts. What's the 200? It's your mean or your average. We're back to that. The funds are buying. Are they buying like they were in cattle? No. That can come if the USDA gives you a gift. If they do, this thing's off to the races because demand in ethanol and corn is very strong. So if we're going to break this ceiling, this 435, it's next Friday.
And speaking of cattle, the cattle market has been correcting after hitting record highs, but nothing's changed as far as fundamentals are concerned. We've been talking about this over the last few weeks. This is mostly fear over headlines and Trump's announcement and social media posts that he wants lower beef prices for the U.S. consumer. But again, like I was saying, is not a lot of change as far as fundamentals are concerned, and futures are oversold.
You can see here on the chart that we've created this double top, but this is your bull market long-term channel. And so we still are trading within that middle of that channel. Keep things in perspective. You're still much higher than you were a year ago, 2, 3, 4, 5. So again, this is noise to us. I would not be surprised if at some point this corrects all the way down to here, and then we stop selling, we resume the uptrend, and we go to new highs in 2026. Same thing with feeder cattle. You can see here that the funds probably overshot the mark more than they did in live cattle, and we're trading down here. So we're back to earth. We're back into the channel. I would not be surprised if we actually corrected all the way back here. And there's going to be some that are going to get hurt, and that's why we have not been playing futures, whether long or short. We haven't even bought puts. We haven't bought LRP. We've just been selling into this long-term bull market into cash. And it's been the best strategy thus far. And once again, market psychology has changed, but the fundamentals have not. I think the funds got too long. They're taking some profits, but they'll come back to this once we get over this overreaction to what Trump's doing.
Let's, from the cattle market, let's look at the other bullish market that's been creating new record highs. But this one is more about ChatGPT and the U.S. labor market. Stocks continue to worry about a weak U.S. Job market, but you can blame that on ChatGPT for now. In the future, given the fact that we are into an AI race, we will have a more efficient and productive and growing economy with possibly higher unemployment numbers until we get more AI skilled workers. What do you think, Mo?
Who would have thought that the introduction of ChatGPT in September of 22 would have created this chart? The stock market's gone to new highs because of AI and its potential. Its potential to provide efficiency and productivity gains, maybe help the U.S. economy gain in GDP while AI is taking away some of those entry jobs, and that's why you're seeing the labor market turn weak. I'm not surprised. I think this trend's going to continue. I think that the labor market needs to get retrained on some AI skills for this to turn, but that could take some time.
Sticking with the stock market and of late, Mo, there's been a lot of discussion on this sharp rally that we've been having in the stock market and comparing it to that bubble from early 2000s, the Cisco bubble, if one can call it that. And after 34 new record highs in the S&P 500, 124 new record highs in NASDAQ in 2025, you're back to a correction and investor profit taking as AI valuations may have gotten too stretched near term. But this is ahead of the big one. NVIDIA reporting earnings for Q3 as of November 19th. Is this an AI bubble?
No, this is not an AI bubble. You're going to continue to hear that, folks. AI bubble every year from now till who knows when. Look, this was an AI bubble because the earnings could not keep up with the stock price. With the earnings in NVIDIA, they've kept up with the stock. So that's why it's different. But there are some AI bubbles within the space. So if you're chasing Oracle, I'd stay away from it. Why? Because it has too much debt, and debt kills companies as well as individuals and farmers. Perplexity's trading at 484 times earnings versus NVIDIA 25. Which one are you going to play? I would stay away from Perplexity. That's a bubble. So unless it can start to prove that it can make a lot of money and the earnings and revenue can catch up to the stock, it's probably at some point going to cater pretty quickly. So just be careful. As I've said to you before, if you want to play the AI space, you want to take some risks, have some exposure, play the VGT, that Vanguard Information Technology Index ETF fund. And sorry, this is just a chart showing you the comparison between the S&P 500 and the medium household real estate house price. I think I've told this story before, but you know, those old grandparents in the 1950s that bought that $1,000 house. You can't buy a house for $1,000 anytime soon, but that house is worth $1 million. That same $1,000 in the S&P 500 in the 1950s or even before is now worth $15.4 million. So all I'm saying is everybody needs a roof over their head. I get that, but don't be afraid to invest in the stock market over a long period of time. You need to do both. Okay? Diversify. And this is incredible. The Mag 7 have outperformed the 493 stocks in the S&P 500, hands down. I think it's going to continue, unfortunately. They should just change the S&P 500 to the Mag 7.
Sticking with that Mag 7 and one of those other big boys. So this image here is of a Tesla robot. But more importantly, 75% of Tesla shareholders approved a $1 trillion pay package for Elon Musk, who is their prime asset as far as the company is concerned. If Elon can meet certain annual goals and milestones, he will receive 12% more Tesla stock, which would be worth $1 trillion more. What do you think?
I don't know if you guys saw the images of those robots moving. There was actually, while they were showing that Tesla robot at the annual meeting, there's some Chinese companies displaying theirs as well at the same time. You know, that Chinese competition where it had a U sort of thing. I'm telling you, if those robots had a human face and they were walking down the street, you could not tell that it was a robot. I'm pretty impressed. I know a lot of people say that, you know, we're not that far ahead. I disagree. AI is further than you think. Robots are further than what you think. This will make Tesla a lot of money, and that's why he got paid, well, approved potentially another $1 trillion. I think this is getting out of hand. I don't know about you, but Otani, $700 million over I don't know how many years, and now this $1 trillion for. I get that Elon Musk is probably the best entrepreneur of the last century or last couple decades, I guess, since the early 2000s. I don't know about going back to the 1900s. But anyways, either way, I don't know. This is too much if you ask me. Is he really worth $1 trillion? Come on. But I think that's where we were headed. I mean, honestly, he's worth $400 billion. He's the richest man. Him and Larry Ellison, I think the CEO of NVIDIA, is catching up pretty quickly. But yeah, I don't know. Just stupid money.
Let's finish off with some weather news. It has rained in South America in the last 7 days, but both the American and European models agree that central Brazil remains dry for the next 14 days.
Yeah, so just to go back to this was the rain over the last 7 days, and you can see the rains here and down here. There's been a lot of rain in this area, including in Argentina, but this is the European model, I believe. So it's dry in here. And then it's also dry with the American model. So you can see that they're finally agreeing. They haven't really agreed a lot, and you can see there's rain. There's rain around it, and maybe down here a little bit. But look, we've raised our yellow flag. It's a cautionary flag. The monsoonal rains are not raining every day. Maybe once a week. It did rain the last 7 days, but if it doesn't rain here in the next 14 days in that central region, it's a concern. It becomes a really big concern. So for now, something to watch, but for a change, the models have agreed that it may turn a little too dry in the next 14 days. Thanks for watching. Really appreciate it. Don't forget to subscribe to our channel. Until next week, until that bullish USDA report, maybe. We'll see you soon. Take care. Have a great weekend.
Bye, guys.